Alright, okay, good evening everyone. Okay, welcome to today's session over here. Again, quick disclaimer before we get started. Any information that's provided within today's session is solely based on my personal opinion, my personal perspective and point of view, of course. They do not directly translate to any form of trade advice or investment advice. Okay, and of course, trading involves risk. So just make sure you're aware of that as well. Okay, so welcome to a new week. For those of you who are first time joining in, what we usually do over here is to run through the market, highlight some of the opportunities that I'm interested in to share that with you guys as well. Okay, and of course, we will have a quick Q&A at the end of it as well, right? So if you have any questions, you'll be able to post it up. I'll be able to take a look at it and answer questions accordingly. Okay. So quick one, let's take a look at the overall week. So this week here, there are a couple of news that may have some impact in the market. But of course, if you compare to like the previous 2 weeks, this week is generally quiet. Okay, we're also going into the end of the month. So again, there's not much of a data left. Okay, so if you scan through very quickly this week, tomorrow we don't really have much, right? So Tuesday here, nothing much over there. Wednesday 8:30 in the morning, we do have the Australia CPI data. So of course that's going to be important if you're trading any Aussie related. So just make sure you're aware of that, right? And one of the pair I'm looking at on Aussie related is the pound odd. We'll talk a little bit about it, but of course take note that Wednesday we do have this news data. On the Wednesday morning, we also have the RBND monetary policy statement coming in, but of course I wouldn't suggest you to trade this news. Is really the transition in the morning, right? So Asia market is very, very slow. You might get slippages, you might get widening of spread. So I would just suggest to stay out of this, okay? And then for the remaining part of the week, Thursday, we do have a little bit on the US side in terms of core PCE price index. Okay, not going to be like the most significant data, but I think core PC price index is definitely going to have, if there's a huge deviation from the expected data here, of course, we may see a little bit of volatility. Okay, and Friday, there's nothing really much. Right, so I think this week, in terms of like what's going to be more of a attention that I want to pay a bit more into is the Aussie CPI on Wednesday. Okay, so that's the primary view of it. So very quickly, jump into the charts over here, okay, to kind of highlight some of the major opportunities, major currencies to take note of. Okay, so of course we're gonna get started off with the dollar index over here. Okay, so for dollar index, very quickly, what I'm seeing over here is still mainly a neutral point of view. Okay, neutral basically means I want to be a little bit more conservative, wait for a bit more information for the market before kind of committing to it. Okay, now the reason for that is because what we're seeing over here, it's that the market has broke this uptrend line, right? Again, I don't trade just because the market break the trend line, but that's one of the factor to also take note. Okay, and of course, what the market has put in so far in this rally, is starting to lose momentum at the top. And it's not very impulsive already, right? And we kind of start to see a little bit of a rollover. So why am I cautious on this is because this break of a trend line is also very corrective in nature. Okay? So obviously, market will not move in one particular direction all the time. So it has been moving up for some duration, and therefore we're expecting some kind of a substantial retracement. Right. So as of now, my primary projection is if you can get a decent correction over here to the upside. Okay, we'll be expecting one more push to the downside to complete this 1, 2, 3, as a corrective retracement of this entire leg, and maybe the dollar can strengthen later part, going forward. So this week here, okay, I would be definitely paying attention to see if you can get a corrective setup. If you can, I'll be bearish on the dollar, and of course that would naturally also translate into the major pairs. If I'm looking to, I would say, expect the dollar to weaken, then of course if you're looking at some of the major pairs, we'll be expecting those major pairs to maybe rally a little bit more. Okay, so if you take a look at euro dollar, which is kind of inverse to the dollar index, okay, this is what we're looking at right now. Looking at a decent pullback correctively, then I'll be more interested in the upside. The one thing to note, of course, is the market hasn't really taken out that high there. Okay, so this minor high here hasn't really been broken. So again, I'm a little bit more cautious as of now, right? Of course, the bias here is bullish. There's no reason to be selling it at the moment unless you do have a valid setup to take this sell trade in the very short term. Now, last week, Thursday, Friday, I remember I'm interested in that, but looking at how price is developing right now, the setup to me is no longer a high probability one. So I'm not so keen in selling this in the short run, but I'll just be interested to see if this can pull back, and then I'll be looking for the buy. Right, so this is definitely something to note out for the week, okay, in terms of euro dollar. GBP USD over here, I'm neutral as well. Okay, this entire development is very corrective, especially in the recent times. This little push up you can see is just slow. Okay, so I'm more inclined to expect market to actually eventually roll over and maybe break that previous low, okay, before maybe the bigger pushback up, right? So I'm actually more inclined in that particular direction, but of course we don't have a sell trade set up right now. We don't have any sign of like confirmation. We are just given the clue from the market that this looks corrective, and therefore the bias to the downside is higher probability, right? So keep an eye on this as well. We may or may not get something for this week itself, depending on how the market is going to react, and if you can get an impulsive drop to the downside, that's where opportunity starts. Okay. Next up, Aussie dollar, pretty similar, I would say, to the euro dollar side of things. Okay, so what we have over here is a little bounce, right? So I'm waiting for that corrective pullback. Then we'll be looking for one more push out, right, minimum. So very, very similar pattern structure to the euro dollar side, right? So you kind of compare this and the Aussie. Okay, essentially we are looking at the same thing, right? So have this two in your watch list. To me, again, this would probably take a couple of days. Maybe the earliest that something may set up for me will probably come around like Wednesday or Thursday itself. Okay, but I think this two definitely in what we call a watch list, right? Then we have dollar Canadian. I'm shifting my dollar Canadian to neutral. Last week I had a very nice little sell trade. Okay, kind of took profit somewhere there. Market kind of reacted off that low, and then seems like it's developing into a little bit more of a complex corrective structure, right? So this can be a WXY, this can be a reset. I'm not surprised if this actually go back down and form another tree wave. Still very, very possible. Okay. But you also want to be cautious because this tree wave here may be completing this push up, and we may see more upside from here as well, breaking that high, right, to complete maybe the fourth wave or the C wave at the top here. Okay, so when things get a little bit complex, right, I like to just stay out and primarily put more of my focus and attention to things that are clearer. Okay, so this one here, to me, I think probably is best to just give it sufficient time to develop for market to tell me, what is the pattern structure that's likely going to develop before we kind of commit to a particular direction, right? So because I mentioned, what we're saying here, kind of give us an equal probability on both sides, right? So I just prefer to stay out of it, right? Dollar yen here has been consolidating for, don't know how long, okay? Since I would say like mid-Feb. So almost good 2 to 3 weeks, right? The market is just basically not moving. I'm expecting a little bit more upside, okay? But if you look at a bigger picture perspective, the market has been rallying quite a bit, okay? So to me, after a substantial move in a particular direction, again, you don't want to be kind of like catching the end of the move, right? So I'm not so keen to be looking at a buy here. I will always prefer for the market to actually do a decent correction before we look for the buy, to do a trend continuation of things. Alternatively, if I get a confirmation that this up move more or less has been completed, the market is showing sign that it's doing a little bit of pullback, short term I can also consider a sell trade. Okay, but at least for now, dollar yen is not really showing any sign. Okay, so again, why neutral? Not clear direction. Suggestion here is just stay out of things. All right. Hope that's clear again. Okay. Now, gold. Okay, so gold over here is giving me a clear sense of direction. Okay, the only thing that I would suggest is perhaps wait for a pullback, right? Wait for a setup. So again, the framework that I always share with traders is three parts, right? You need to have the direction determined, you need to have a setup that you are clear in terms of like conditions and criteria you need to execute trade, and then last thing here is context, right? From a bigger picture perspective, you have multi alignments. So direction is clear on gold side, right? I think with this completion of a structure here, very nice little bounce. Plus, if you can get a correction, the probability to the upside is pretty clear cut. Okay, so that's where we get a very clear direction bias. The only thing here I'm waiting for is a setup to come to me, right? And again, the fit here doesn't mean that you instantly just get in. Okay, it's not a entry price point, but a fit is a key area of interest, which means ideally I would like to see the market pull back into this territory to potentially get a trade. Okay, so keep an eye on the area around 2010. Okay, if you can get a corrective pull back, right? So you don't want to see a strong move back down. You want to see a slow correction, then that would give you a high probability trade to the upside. All right, so that's something to look out for. That's on gold. So definitely clear direction buy. Just wait for the setup itself. Okay. Then we have crude oil. Okay, so crude oil, I'm actually neutral, but looking at things, how it's developing right now, this one here didn't really break it, but came very close. I would just take it as kind of like a topish formation potentially. Okay, have a little bit of a trend line here. The market just broke it today. So from this perspective here, what I'll be looking out for is we have our first sign. Okay, where the market seems to be reversing, right? But I want to also see, do we get a corrective pullback? Ideally, we want to see that corrective pullback, right? So if you can get that, I'll be starting to shift my direction to being being bearish. Okay, but this would give it maybe another 1 or 2 days. Maybe by Tuesday or Wednesday, we'll get a clearer picture of crude oil. Okay, yeah. So that's my take on it. Okay, I would start to again, to be just cleaner, or just keep this here, right? So yeah, I'll keep this like this. Again, as I mentioned, wait for 1 or 2 days to see if this give us that corrective pullback. Okay. Equities in the US, I think it's very obvious. The bullish momentum is there. My take for this year again is that equities in the US are likely going to continue to be bullish. There's really no reason to be selling the equities this year, right? Especially since the conversation from the Federal Reserve has been starting to pivot into cutting rates, right? So, yeah, I hope that's quite obvious, okay, from a macro angle. So I'm still bullish on this. The thing again is I'm not very keen to be buying at the top. I always want to wait for the setup to come to me. Okay, so again, a corrective pullback would give us a buy trade opportunity on S&P. Okay, I think quite clear on that. Pound yen. Hey, in fact, most of the yen, right? So just now we talked about the dollar yen. So over here, same thing as well. Pound yen. I wouldn't want to be buying at the top. I want to wait for a decent correction over here. The market is still basically pushing higher, right? So I think the fit at this moment is still pretty much irrelevant. Okay, until we start to see some sign of a pullback. So I would suggest again, just be patient on things. The yen pairs for the week, this week itself, probably not gonna get anything out of it. Okay, so you probably don't want to pay too much attention and focus on something else, right? That's what I would suggest. Okay, same thing here in terms of the Aussie yen. I think short term, if we can get a first impulsive push to the downside, okay, then yes, we can get a correction and a short-term sell trade, right? Short-term bearish bias. But if we don't have that impulsive move and the market essentially just do like this, I'm not interested in that sell anyway, right? Because that's not a high probability. That's not a trade that I want to definitely focus into. So again, the bias here comes from the part where the market has kind of like extended quite a bit, and I'm expecting a pullback. So if we can get a first impulsive drop followed by a correction, then that would be a high probability trade to the downside for the short term. Okay, so this might take some time again, right? So there's no need to rush things through. The yen pairs, you just need to be very patient with it. Okay. So what's clear to me is over here, pound Australia, right? EuroCAD, this morning I was looking at it, but of course the market continued to push up. We'll talk a little bit about it. And the setup is no longer valid. I'll need to look for an opportunity to get involved in the buy side of things. Okay. But let's come back to pound AUD first, right? Pound AUD over here, I'm actually interested in the sell side of things. The market is currently kind of testing the 50% FIB, right? Again, that doesn't mean that you immediately jump in and trade the FIBs. The FIBs again, they're always just key areas of interest, right? So what we have here is a crawl. We get our first push down. Very nice little impulsive momentum as well. The pullback seems corrective enough for me. The bias here definitely downside, right? So we are expecting kind of three-wave move to the downside. So short term here, at least for this week, we're interested in the downside on pound AUD. Okay, so the target here, the key area I'm interested in, of course, is somewhere around this zone, right? 1.9360, 1.94 psychological number as well. And the target here, I'm using a retracement. Okay, of course, depending on how conservative you are, okay, the market may or may not hit that 50% mark. But that would be my final target, right? Potentially around 1.9060. So really, you need to be clear in terms of like what is the setup you want, what are the conditions, what are the criteria that you need to see according to your trade plan, according to your setup, according to your strategy, to execute the trade, right? Okay, so again, I'm personally interested in this sell. Doesn't mean that it will fall into the strategy that you are trading as well, right? Because every trader would have their own set of setups and strategy. Okay, so yeah, this is definitely one of the highest probability, I wouldn't say probably, but one of the key pairs that I'm definitely paying very much attention on for this week, right? And of course, just now I mentioned at the start of the session, Wednesday we do have the Australia CPI data as well. So that might also build in as a potential catalyst for pound Aussie to move, right? I mean, when the high impact news data comes out, we'll never know exactly which direction, but we only know that that is a potential reason for the market to move. Okay, so keep an eye on this, right? If you're interested in the cross pair and pound Aussie. Okay, then we have EuroCAD, right? So as I highlighted over here, initially I was looking at EuroCAD. If you can pull back, we'll be looking at a buy, but the market today, okay, kind of broke that previous high, so I think the overall structure changes a little bit. But okay, the directional bias remains intact, right? We're still basically bullish, but we just need to wait for another corrective pullback before we get involved in the trade. Okay, now this is not the cleanest label of all, but I think it's fine. It's valid to put in a 5-wave structure development here. Okay, because all rules are fulfilled, right? I mean, according to Elliott wave 4 didn't come into wave 1 territory. Wave 3 is not the shortest, and then everything is okay, right? It's good to go. And of course, wave 1 over here can be a leading diagonal structure, right? So in that case, if you're expecting wave 5 to have completed, we'll then want to see a simple 3-wave pullback. Again, very nice little alignment around that 50 where wave 4 is. Usually the ABC comes back to where wave 4 territory is, and then we'll look for the buy. Okay, so the bias is still the same. It's just a slight change and update in terms of the structure, and therefore we just need to be a little bit more patient. Right, so that's on the EuroCAD side of things. BTC, Okay, Bitcoin over here, I think it's a very clear 5-wave structure development to me right now. Just simply waiting for the pullback of wave 4, ideally correctively towards the day 8.2 retracement area. Okay, and that will give us an opportunity to trade the 5th wave up. Okay, I don't think there's any reason to be selling Bitcoin right now. Okay, I think the directional bias is quite clear. You just need to wait for a valid setup for you to get involved in the trade. And of course, do take note that somewhere around April and May this year, we do have the halving. Okay, and historically, when there's a halving event, Bitcoin prices tends to skyrocket post halving. Okay, so that's something to note as well. If everything aligns very nicely, we may have our first 5-wave up, down, to the upside, and then we'll have a 3-wave correction going into halving. And then if everything builds in nicely again, post halving is where we're gonna get that rally move, right? Okay, so again, from time scale perspective, if this is gonna develop as what we anticipate, then that would be like picture perfect. Okay. Yeah, so that's what I'm looking out for in terms of Bitcoin as well, right? So if you're into crypto space, I think this year definitely very, very exciting, right? And I think the opportunity again is massive, right? Because halving takes place 4 years, once every 4 years, and of course, we're not gonna keep seeing similar kind of a reaction, right? Every halving that's gonna happen. So you may want to capitalize on that opportunity, right? That's what I would like to, in terms of drive across, right? Is to get yourself prepared, right? Again, I'm not telling you to go and put everything into Bitcoin, but of course, it's a high risk speculative trade that can potentially give you multiple R returns, in a fairly short period of time, right? So it's a high risk, but potentially a high return kind of trade. Okay, so if you're interested in this kind of setups, do look out for Bitcoin this year. Okay. Good. Yeah, so I hope so far so good. Again, as of the start of this week here, we don't really have a lot of really concrete ideas today. Okay, but I kind of drop a bit here and there, right? Like euro dollar, Aussie dollar, gold, crude oil, right? As well as the pound odd. Those are some of the things that is in the watch list. Okay, and you just need to wait for a setup to come to you, and then you can execute those trades. Okay. Good. So very, very quickly, let me take a look at some of the questions that is coming in. Okay, and I'll answer them accordingly, right? So great. First one here I see is from Wei, right? So Wei looks at the dollar Canadian and the euro pound. Okay, so I think dollar Canadian, we kind of touch on that a little bit already. So I'll jump to the euro pound side of things. Good. So euro pound, I think overall this analysis that were done, I think last week, is generally still valid, I would say. Okay. What we have over here, okay, potentially is what we call a expanding flat structure, right? Okay, so far we get a nice little reaction around that 618, right, which is great. Usually from a expanding flat structure, we also use the extension over here around 127 to 1618. Okay, so I think 1618 kind of didn't retouch, but 127 is that zone, right? So we kind of got a nice little reaction around this zone. So potentially that's what we call a expanding flat. Okay, and with that in mind, we're kind of expecting one more push back up, right? So if you're very, very conservative in your target, okay, probably shoot for the zone, okay, 8600, right, which is again a psychological number as well. Okay, so that would be something to look up for if you're into euro pound. I think something like that, right? Probably get some nice little alignment there as well. Okay, and then that would be basically a simple 3-wave move that looks something like this. Okay, I don't trade euro pound. to me, I just don't like the nature of this pair itself. Okay. But for those of you into Euro Pound, hopefully this analysis give you some ideas to work on. Okay. Jay asks, checking with you on the dollar yen H1 and H4 time frame. Is it possible for a short buy momentum? Yeah, I think just now I kind of mentioned that briefly as well, right? If you're looking, I mean, I'm still expecting this to go up a little bit. Okay, this entire move here is still essentially a corrective structure. Whether this is going to be a triangle or not, it's really hard to say, right? So, again, whether is it a trade worth considering, there are multiple factors, okay? And one of the key factors to consider, obviously, is the risk to reward ratio, okay? And ask the question to yourself, is this trade worth taking the risk? Okay, and of course, when we talk about risk here, is the trade worth it or not? It's not just about monetary risk. It's not just about your capital risk, right? There's another aspect that a lot of traders don't put enough emphasis on, or even not aware of. Is your mental capital. Okay, what I mean by mental capital is when you take a trade, just visualize this, right? If today, you are 100% focused, right? You are like at your peak performance, and let's say that's 100%. Okay. Now, if today you put in a trade, then naturally you will not be in your 100% anymore, right? Because you will need to take a portion of that focus onto the trade that you are taking, right? So if today you, let's say every time you take a trade, you need to sacrifice 20% of your focus on the mental capital, then imagine today, you take a trade on dollar yen, right? 20% of the focus is being put on there, right? You're investing your mental capital into that trade as well. Then maybe because of that, okay, you may be distracted for better opportunities, right? You may miss out on maybe better opportunities because you're now involved in a trade on dollar yen. Okay. So the question that you always want to ask yourself is it worth taking, not just from a monetary reward point of view, right? But it's also more of like mentally, would you want to be invested in this trade? Okay. So that's something to also consider, right? Beyond the usual risk management perspective. So to me, this is kind of the trade that I will not be interested in, right? Simply because, number one, of course, the upside potential is not huge. To me, I categorize this kind of a buy here as something that if really I have nothing else, then maybe I want to invest a little bit of time to look at it. But most of the time in the market, we would have sufficient opportunities that are better than setups like that for me, right? So hopefully that kind of give you an idea in terms of what to look out for. Okay, so I can't give you an answer whether is it worth or not, right? Because everyone's different. Your time frame, your horizon might be also very, very different, right? You might be happy to take maybe 20, 50 pips in a shorter time frame period. Then that's very, very doable, right? Because you can see where we are right now to potentially at 151. We have about 50 pips, right? So again, you need to make that decision from your own perspective, right? So I hope that helps. Okay, Chia here asks, please share A50 Hong Kong index and the FTSE, right? UK 100. So let's start off with A50. Okay. So A50. Okay, again, these are just very, very rough label. It doesn't mean that you want to trade according to the label, but I think the first very obvious thing about A50 on the 4-hour time frame is this is crawlish in nature, right? So there's no reason to be buying where the market is. Okay, you always want to wait for the pullback. Okay. Now this pullback here is going to be a little bit tricky because if we're going to look at it from a wait forward perspective, that means that price should not cross into this territory. Okay. But alternatively, what can also be looking at is this is a 3-wave move, and this pullback can be deep and retest this zone before going up. So again, to me, the label is not the most important thing. Okay, what is important is look at the pattern of what price is developing. Okay, now obviously we're starting to see a little bit of rejection, right? So if this gives you a correction here, you can still look to sell it for the short run one more time. Okay, and if you're looking to sell, where would your target be? Around here. Okay, very simple structure area, right? You pull FIPS, that's about 50% mark anyway. That will be a short-term target. Okay, but if this whole thing is going to come down correctively, you don't want to be shorting it for the long run. You want to then eventually look for buy opportunity back up. Okay, so short run on A50, potentially downside, but overall, after the sell trade, you may want to then pivot back and to look for buy opportunity. Okay, so that's on the A50. In terms of Hang Seng, okay, the overall chart looks a little bit different, right? So Hang Seng over here, I think overall structure remains intact. We're still waiting for that pullback. Correctively, then we'll look for the buy. Okay. Again, whether you want to be selling this to the downside, up to your trade setup, right? Based on your trading plan, based on your style, is that something you often look into? Because again, this one here seems to have completed a simple three-wave structure at WXY. Okay, so we're expecting a deeper pullback. If it can come down correctively, that's an upside. Okay, so that's on HSI. Okay, very quickly jump into FTSE. Yeah, so I think FTSE, based on what we've done last week, probably is gonna still remains the same thing. Okay. Right, so from this angle here, it doesn't seem to be a completed move, right? So again, study pattern a little bit, right? So historically, what has happened? You can look at this here, right? So what happened historically is the market put in a top, came back down, break that top, then only make a move, right? So it's kind of like as it's completing that cycle to the upside, it has another break of the top before the completion of it. Okay, so if you take a look at where we are here, I have this top not really broken that yet, so possibly what can happen is this can come down, maybe make another move out, right? Very similar to this here, then only make a bigger move back. Okay, so that's where I kind of duplicate this here, right? So if you kind of put it here, of course, it's not going to be 100% the same. Okay, but of course you can kind of expect similar kind of pattern, right? So you kind of expand this a little bit, you know, that's kind of like a forecast of what can potentially happen. Okay, so yeah, I would say be cautious in selling. It may be a little bit too early to get involved in that sell side of things, but you may want to just wait for this to push up and then get a sign of this coming down, and then of course you can start to consider taking the sell trade from there. Okay, that's what I'll be doing like if I'm interested in the UK 100, right? Yeah, so that's my point of view. That's my perspective on the FTSE. Okay. Okay, so Sunajo here asks about a couple of pairs. Euro odd cat. I think Euro pound we covered already, so I'm not gonna repeat that. Euro Australia. Probably gonna be very much okay. To be honest, this is not the cleanest structure of all. Whenever I see something like that, I just like to avoid it. Okay. The market is basically in the consolidation phase. It's ranging. It's a very complex structure from Elliott wave point of view, right? So my suggestion to you guys is whenever you see something developing like that, just move on first, right? Yeah, so I would say Euro odd is really not the best pair to be focusing on. Whether this can break, if this breaks the trend line impulsively, then giving you a correction setup, of course, the bias will be back to the upside. But you also want to take note, you know, if the market actually does something like that, a break and then instantly come back down, then of course this would just be adjusted, right? The trend line again is for visual perspective for those of you who are new. Okay, for those of you who have been following me, you know I keep saying that, right? Trend line is just for visual perspective. It's just to help us frame up and communicate the idea of what I'm looking at. It doesn't necessarily mean you trade the break of the trend line, you just trade the bounce of the trend line. Okay. You always focus on the pattern, right? That's the first thing I always talk about. So Euro odd is something that you just want to stay out of it. Okay, I would say give it maybe an entire week before coming back, right? So this week here, if you're looking at Euro odd, my suggestion is do not focus and do not put in too much emphasis on it. Okay. Odd cat. Let's do a quick look. Yeah, odd cat is quite clear in terms of the setups and the patterns, right? Definitely bullish in the focus of things, right? So again, you just need to pull in some key areas of interest. Okay. Ideally, we want this to come down correctively, and then of course we'll start to look for upside. Okay, I think this one is quite clear in terms of like Aussie dollar as well, right? Very, very similar pattern itself. Okay, so you can see similarity in the projection of things. Okay. Yeah, so that's that take. Okay, I think Nasdaq, again, in terms of US equities, they're more or less the same, right? So if you take a look like Nasdaq, okay, bullish, Dow Jones, okay, again, it will be bullish, right? So overall, I think all the equities, if I'm just gonna look at S&P in general, they're likely gonna be the same, right? Because they're more or less in the same market itself. Okay, so whether you're looking at S&P, Nasdaq, or Dow Jones, I think generally is upside. Okay. Question here from another trader asking, as you're taking FTMO challenge, can you share your thought as a swing trader? I think previously, I think just like 1 or 2 years back, most of the prop firm challenge has a time limitation, right? So like you need to pass your phase 1 within 30 days. You need to pass your phase 2 in another 30 days and things like that. So when they were having such restriction back then, it's very difficult for swing traders, right? Because some weeks we have nothing, okay? And if you are put into an environment where you need to pass your challenge in like 30 days, you're gonna put yourself in an unnecessary pressure to take trades, right? And you're gonna take like low quality trades. But today, the FDMO challenge has removed that restriction of time, right? Which is great for swing traders, right? Which means that you can take 1 month to pass it, you can take 2 months to pass it. You're not in a environment where you need to have certain number of trades within a certain period of time, right? And that's going to be good for swing traders, right? The other thing that they allow is to hold your trades over the weekend, okay, which is again very important for swing traders, right? Because you don't want to cut short your winnings, right? If you have a profitable trade running in your favor, you don't want to, because of Friday market, and then close that trade. Okay, so I think with the shift on from previously to where we are right now, in particular in terms of like FDMO challenge itself, I think it's great for swing traders, right? Because that's something that we can now participate in, right? Yeah, so that's my thought, right? And I'm just in my second week into the challenge, right? So we'll see how it goes. Okay. So far, haven't heard of any issue with that, but of course in the prop firm industry itself, you also want to be very careful, because sometimes these funds, these prop firms, right, they may not kind of like honor the agreement, right? So you may be like passing, and then you're making profits, and then suddenly when you withdraw, they kind of give you some funny excuses and not make your withdrawal and things like that. But so far, I think like again, it's nothing guaranteed, but you always want to pick a prop firm that has certain reputation in this industry, right? That has certain history, certain duration, and therefore it's a little bit more reliable. Okay, so hopefully that gives you some ideas as well, right? Okay, Jay asks one more question. Looking at the current sentiment of risk seeking, on franc yen, which currency is better suited for riskier market condition? I may not get your question entirely. But my best guess is you're asking uh which currency is better suited for risky market. I think your question generally is during a risk on environment, which currency generally tend to perform, right? Hopefully I can understood your question correctly. Again, it's not all the time like that, but generally during a risk on environment, okay, currencies such as Aussie, currencies such as New Zealand, they tend to perform a little bit better, right? And the yen and the Swiss itself, right, tends to perform not as good. Okay, so think of it as let me just add this in, right? So risk on, what's gonna likely strengthen a little bit more is Aussie and New Zealand, and then during risk off, which is the opposite, the yen and the franc tends to perform a little bit better. So yen and franc, they're basically quite closely correlated. Okay, so looking at Swiss yen itself to measure the risk sentiment, it may not be the best pair to be looking at, right? One of the better pairs to be looking at to gauge risk sentiment potentially would be the Aussie yen, right? Because Aussie is risk on environment, is a kind of like higher risk, if you put it quote unquote, higher risk aspect of currency. And then yen is in favor of risk off, right? So it's kind of like a safe haven asset, right? So Aussie yen, if you put them together, generally if Aussie yen is rallying, means we're in a risk on environment. If Aussie yen comes down, we're in a risk off environment. Okay, so kind of hopefully that answered. Okay. Tan asks, EuroCAD and Aussie CAD, I think we covered that, right? EuroCAD, just I mentioned the updates on it. Aussie CAD here, I can update that as well. Okay, Aussie CAD to me is quite similar to Aussie dollar anyway. How many percent per trade I risk for the challenge? Okay, because the FTMO challenge itself, I'm taking there's two phase, right? That is the initial phase 1 and then the phase 2 aspect. Okay, so for phase 1, I'm risking 2% per trade. Okay, and my plan here is once I pass phase 1, moving into phase 2, and then eventually actually trading the funds there, it will be more of like 1% per trade. Okay, I'm doing 2% per trade for the first phase is to be a little bit more aggressive so that I'm able to hit that target a little bit faster, right? Of course, you also need to take note of what is the maximum drawdown that each challenge requires, okay? The specifically for FTMO, the max DD is 10%. Okay, so I'm calculating based on if I'm gonna take 2% risk per trade, maximum consecutive losses I can take is 5 trades. Okay, which again puts me in the perspective of I'd rather go for high quality trades compared to quantity, right? I would want to focus on, I don't need to take a lot, I just want to take very good trades, right? So I can risk a little bit more and hit my target a little bit easier. But once I pass that phase, right, then obviously I'll be taking maybe 1%, 1.5%, right? Some challenges, right, their max drawdown may be 6%. Okay, so you need to be aware of that, right? If today your max drawdown that the challenge allows you to have is 6%, then don't go taking 2% per trade. Okay, you increase the odds of you failing that challenge. So my take here is if your maximum drawdown that is allowed is 6%, then just take 1% per trade. Okay, so you give yourself that buffer of like 5 trades, consecutive losses, right? Yeah, so that's how I'm approaching this kind of challenges. Okay. Yik Feng asks, is it 1-to-1 RR? No, most of my trade minimum is about 1:2. Some trade take profit is about 2.4, 2.5, right? So my minimum risk reward is 1:2. Of course, there are some trades that I'll trail stocks to protect profit, and then when the market comes back and hit the trading stop, we may get out less than 1:2. Okay, but my minimum initial target is always 1:2. Okay. Last question I see here from Sunajo, right? As a swing trader, what will you do when the news comes out? Do you close the trade? No. Okay, again, from a swing trading perspective, from a higher time frame perspective, unless it's like a very, very major news, we don't really factor that too much into the trade decision, right? We just understand that, oh, there's this news coming in. We factor in that potential volatility and things like that. But I will not personally close a trade just because there's a news coming in. Right? So I hope that helps. Hey, so I hope today's session give you some insights. Last thing here before we kind of conclude, very quickly sharing with you about this website over here, right? It's called everythingtrading.com. So if today you are not aware of this, what you can do is you can head over to everythingtrading.com. Go and sign up for your free account, right? It's free. You don't need to pay. You don't need to put in any, just need to input your particulars, your email, and then confirm your email, and then you'll be able to log in, right? So very quickly, let me log in and show you what you're gonna get inside. Okay. Once you created your account and once you are able to log in, okay, the first thing you're gonna see once you log in is the dashboard, right? And I would say one of the key focus on this platform on everything trading is basically the live trading sessions. Okay, so there are multiple speakers, traders that's gonna be sharing with you at different time zones, different trading sessions as well. Okay, covering quite a bit of different languages, right? English, Arabic, Chinese, in Spain, okay, Espanol. So you're able to then register for this live training sessions, right? So for me, I'm running it on Wednesday and Thursday evening, right? So Wednesday I'm running in Chinese, and Thursday I'm running in English. But of course, if you want to join in other traders, like Daniel here runs every Tuesday and Wednesday in the evening. Okay, you are able to then register and join as well. Okay, now if you look at the left hand side of things, we have over here, you can see the learn tab. If you're very new to trading, there are some trainings over here inside. If you go over to advanced tool, okay, there are multiple tools that you can explore, right? Again, I'm not gonna go through everything now, but I'm just sharing with you and bringing the awareness to you if you're not aware of the website itself. Okay, so once again, the website to register for a free account is everythingtrading.com. Okay, as of today, it's still free. So my suggestion is to make full use of it, right? Because these are all free resources that you may be able to leverage on to help you in your trading. All good, okay? Yeah, so that's all for me for today. Okay, all the best to trading, and I'll see you guys in the respective sessions itself. If not, then it'll be next week live session itself. Okay, so that's all. All the best. See you guys. Bye bye.